Hey, what's up, everybody? It's Omar from the Bullish Bears team. I wanted to do a quick video about how I trade the market open and just some things that I've kind of experienced in my short time trading. Um, right now I'm using the Thinkorswim platform, and what I have over here are my little scans. So, I have my dip buy scan, I have my nightly scan, I have my gap scan, my two candle gap scan, and my watch list. So, basically, what you should do is every night, right after the market closes, at some point, usually around 6, 7 o'clock, because that's when the market really has settled. I don't know if you're aware of this, but people trade all the way up to about 9 o'clock at night, and sometimes stocks move after hours. So usually about 6, 7 o'clock is usually a good time to build your watch list. And you kind of build your watch list, and you kind of put all your plays. And here's my watch list for Monday, and I have all my stocks that I'm kind of going to be watching for Monday. And the reason why you build a watch list is exactly that. You have stocks that you kind of want to watch to see what's going to happen on Monday. And that way you can focus on a stock, because it's the market can be extremely overwhelming when you open. You got all these stocks and you don't know what to do. Well, the first piece of advice that I'm going to give you is just focus on trading one stock at a time. One stock at a time. All right? What you should be doing, okay, before the market opens, is there's several things you can do. They have, Thinkorswim has this live news feed where if if you just if I unlink this, so I'm not linked to anything, this would, and what it does, it'll tell you all the news that's coming out about any stock at the moment. And news is what drives momentum in stocks, especially when you're day trading. Good news or bad news? Good news is an earnings report where, let's say a drug company says they're doing they're trying to find some cancer drug, and they had a trial, and the trial did really well. They injected something in monkeys, and the monkeys responded well. Then that could potentially drive the price up, and that's something that you may want to look at to see. Or an earnings report, Apple does well. So when Apple does well, they beat earnings. Guess what? The price of the stock goes up. Stuff like that. That's what you should be looking for. You should also be on Twitter. Twitter is powerful. You can go to Twitter. I have a Twitter handle. Watch Old Trade is my Twitter handle. And you can. What I do is I just kind of go through the homepage, and I just see what all these. I follow a lot of these day traders, right? These are the big, well-known day traders, and they post things about what's moving, and everybody gets a sense of what's going on, right? So now, with that said, okay, with that said, let's assume you are, the market, you don't see a lot of volume or no news, right? And you're looking at your watch list, and the market opens, and the stock immediately when it opens, it's trading, sideways. I don't know. I'm trying to something like this, where it's just sideways. It's a perfect example. You're like, well, I don't know what the fuck to do, right? It's sideways. When you see a stock trading like this, and you want to avoid it. You want stocks that are either moving up or moving down, or look like they're gonna move up or down. And you see stocks like this, and you're not sure what you're gonna do. So that's the whole purpose of these dip buys. These scanners that I created. So you're gonna have to watch the previous video. I have a previous video on how to actually build these scanners that you do. So what I do is, and I'll talk about how I found my play on Friday. So what I do is the market opens, right? And let's say I have my watch list, and I don't particularly see anything in my watch list. And what you're doing is you're literally clicking through when the market opens, and you're trying to find a play. What you want to see something either moving up or down. So here, the gray signifies the pre-market, and the white signifies the market open. And if I see something start like this, I'm looking at it. This is something that I'm going to be very interested in, because the stock is moving in one direction. All right. That's what you're kind of looking for, right? But, sometimes that doesn't happen when the market opens. So let's assume that doesn't happen. What you're going to do is, this is what I do. I look at my my scanners here that I've created. And what I did was the first scanner I kind of look at, sometimes it's either the two gap scanner or the nightly scanner that I have. And what I do is I right away I start filtering to make sure that whatever's filtering is filtering by the highest percentage gainer. And then what I do is, you see, this is called a strength meter. This is like your best friend in a certain ways. What I do is I click on it so that it filters all the stocks. And what this is telling me is that when the strength meter is like this green, it means that the stocks are trending upward. And that's what I want to do. I want to find stocks that are immediately trending upward. Okay? And Friday, that's exactly what happened. So when the market opened, I was doing something, and then I kind of like settled in, and then I looked, and then I said, okay, let me start here with the night, and I found IMMU immediately, like that would like appeared on my top, because that just started moving upward. So what I did really quickly was I clicked on it, and when I clicked on it, I saw the stock was gapping upward like this, and that is like beautiful. That's what I want to see. This is called, let me zoom in here. This is called the 9 EMA. This is called the 9 exponential moving average. And then what you're going to see is this red one is the 20 exponential moving average. And then this is VWAP, and then this is the 200-day moving average, and this is the 50-day moving average. But really, all I care about to see is that a stock is in front of the 9 EMA. And what you should do immediately, and if you notice, you had this trend line, because this is exactly what I did on Friday to kind of get a sense of the direction of where the stock was going. What I do is, let me remove all drawings. Remove all drawings. Yes. And then, so what I did was, I said, oh shit, this thing is gapping up, right? So what I do is I immediately draw a trend line. So what I do is I put a trend line right through right where the candles are, like this, so I can get a sense of what the stock is gonna do. And as long as the stock, why is this not working? And as long as the stock is following the trend, then I know that the stock is trending in a certain direction. Because what happens is, when a stock moves away from the exponential moving average, you don't really know what it's going to do, right? So what I did was, I was watching the stock as it was trending, and I see it going up, and I said, well, $5, whole numbers are psychological resistance points, and I saw that this stock, I saw it right about here, about 496. And then I saw it break $5, so it broke the $5 mark. And I said, well, I'm not going to get in this because I'm not sure what the hell this shit is going to do, right? So, and what I really like to do is focus more on shorting. So I want to see if this is going to like top here and then sell off or what. But what you do is, when you're looking for an entry, there's a couple of ways to do this. And this is the 5-minute chart, and this is the 1-minute chart. What you kind of do is kind of got to watch both. What I do is, on the 5-minute chart, this thing kind of like, you see how it gapped up and then kind of consolidated? This is forming a bull flag. What I do is I look at both to see if it's going to break past the 9 and 20 EMA, or is it going to hit the 9 EMA and go up. And when you see, this is like the perfect type of trades to take, because it gapped up and it formed this bull flag here. And once it touched the 9 EMA, and you see how you break above the high here, this is your entry. And what I did was I got in about right here, okay? And another way to do this is, if you're not sure where to trade, when you get the pullback here, what you want to do is, once the candle makes a new high over the, so it makes a new high over the previous 5-minute candle, that's your entry. So this could have been your entry here on the 5-minute. On the 1-minute, I would look to, as soon as this touches and pushes upward, I'm making it. Even though it doesn't break above this, I mean, you could technically jump in. A lot of traders do that. But what I did was I wanted the confirmation on the 1-minute here, and I got in. You could do the same thing on the 5-minute. You can wait to see if it breaks above this, and once it breaks above this, you could jump in and jump right up. And that's what I did. Once I got in here, I just watched it go up, and then it had its second pullback. And then because it didn't break past the 9 EMA, I just stood in, and then I watched it go up. And then it kind of went up one more time, and then broke back. Now, usually a stock has 2 pullbacks, and usually after the third, it sells off. It usually sells off, and you're gonna see here that it hits the 9 EMA again, and I sold right I sold, actually, when it broke 550, it came down and it broke below 550. So right here, I watched to see what happened. It hit the 9 EMA and it kind of broke above it, and right into this, I think I sold like right in here. and because I my expectation was that it was gonna pull back and sell off, and what happened was it did kind of pull back, but it didn't sell off. It kept going here, and then here's where people started taking their profit, and it hit a low of 539. So here I was looking to short it right into here, and I don't know, I got distracted or whatever. I don't know what I did. I think I moved away, but I was looking to short this, and I saw it go down. But there was and what you should be doing is, and I didn't put it. I usually have like level 2 here, to kind of see how many buyers and sellers here. So how many sellers are on their ask and how many buyers on the bid. And then what I usually do is I also have this time and sales tape, so you can see how many shares are being bought and sold in real time. So it gives you a sense of the direction of where the stock is going. So I have usually, this is kind of how I have my real setup here. Now what I do is, once you see it pull back, I saw it pull back, and I said, oh shit, I don't know if I'm gonna do this. Let's see what happens. And in the next minute, it kind of started gapping up again, and it broke. But I was like, this is forming a shoulder. If you look at this, is a shoulder, and I love to short what I call FU breakdowns, because it looks like a stock is giving you a middle finger. And it had its last run here, and this is when I shorted. So once I saw it hit its high, and I saw the wall of sellers, and it was starting to reverse, I shorted here. And if you look at my Twitter, if you think I'm bullshitting, I actually posted this on Twitter. Let me go to me. If you look at the time, look what I said. I followed Foos, Cameron Foos, and I was like letting them know. So look, IMMU ripping, looking for the head and shoulders pattern to form to short into the reversal, right? Look at the time I said this. This was 10 a.m., right? You guys think I'm bullshitting? This was, all right, so now we're looking at this at 10 a.m. This was right here, 10 a.m., right? This was at 10. Okay, I already got out at this point. So now I'm watching this, and I see it form, but I see this fall, and I'm watching it, I'm like, all right, it's ripping. And then I saw it hit its peak, and when I see, this is like the FU, this is like the middle finger point. And then I start seeing it reversing, and I start seeing a wall of sellers come in. I start seeing the ask and the bid. The bidders are getting taken out, and I short it like right into this, and it just, look what happened. The rest of the day, it just collapsed. It went from 578 all the way down the rest of the day, all the way down to 515. Now I didn't hold it all day. I wish I would have. I actually covered right in here about 541. So I got executed on like 570 something and got out 541. I made like, I don't know, like 25 cents or something like that. But I had a sizable position, so I made a very nice profit. And that's what I look for, guys. For me personally, I like to let the stocks run. Like this time I bought, but most times I didn't. But this was so easy to buy because it was riding the 90 MA. It was so easy to follow. But usually what I like to do is I like to let the stocks run, and then I like to short into the reversal. And that's what I do, guys. I just basically, what I'm doing is I'm hitting the filters, right? Making sure that there's volume, looking at the strength meter, and then I just literally click. I just click. So like, let's say the stock, had I clicked it when the market opened and I see it gapping like this, you kind of watch it to get a sense, and look, it kind of gave back its gains. This is a stock that gapped up quickly and sold off. And all you do is, once you start seeing the stock like gap up, what you want to do is you just want to put a trend line. So you're following the trend, and then you short it. Once it breaks the trend, you know that there may be a reversal. And look, it kind of came back down, and then the 200-day moving average became the support level, and it kind of bounced off that, and then the rest of the day it actually wound up running again. But that's all I do, and I'm just clicking and looking at the stocks. I'm doing the same thing on the two candle gap scan. This what it does. It just shows you any candles that close with two green candles with a minimum of 500,000 shares. It'll pop up on my scan, and I just click. And what I do is I just filter this to look for the stocks that are green, like this. Not that are flat, or not that are gapping down. The ones that are gapping up. So I would click this, and then look, if I had saw this at the market open, look, I'm definitely looking at this. and I'm, looking to see. What I like to do is, like, I would have just watched the stock, and you see how it's there's some space between that and the 9 EMA. What I like to do is I like to see a stock sort of pull back to the 9 EMA before, if it's running. I don't like to chase because you don't know what you're gonna do. But because I focus more on short selling, what I do, and this is where I'm trying to get others in the group to really understand that short selling is where all the money is. I'm telling you, and it's a lot less risk. So let's say I saw this, right? And I'm not sure what it's going to do. What I'm doing is I'm literally putting that trend line, watching the stock rip, and then right into the reversal, I just short. And look, and right over here, look, it kind of consolidated, and then it just kind of gapped down. It went from 12.89 to 12.58, and that happened in 3 freaking minutes. And what you can do, they have this active trader thing here, where you can kind of like, join. You can just put a short order here where it says join the ask, meaning this is the ask, or sell the bid, where you can short into the bid. So you can have these buds, or you gotta watch my other videos. I have this thing where I just go right here and I right click on the candle and I go sell, and then I have like a sell with a stop limit. So if when I click it, what it does, it triggers a sell order. So if you notice, my sell order is the price of the candle, right? And then what it stops out at 10 cents above. So like if the stock goes 10 cents above my short order, it automatically closes my position so that I don't lose more than 10 cents a share. So you can kind of create triggers, and you got to watch some of my previous videos where I kind of go into all that. You can kind of configure this, and you can have this do a bunch of things. You have the big buttons here. You can kind of, do that here as well. There's a lot of ways to trade. There's a lot of ways you can kind of go in and get in your position. But that's what I do, guys. I just basically look at stocks. And I like to look at stocks that are gapping up because I wanna short into the reversal. So that's what I'm doing. I'm just looking. I'm just clicking away. Look, I would have, I'm just looking to see. I'm clicking on this filter. So when it's going the other way, when it's like red or sideways, I'm not even looking at those. All I care about is the green ones, the ones that I want. And I want to make sure that there's value. You want to trade something that has some value on it too. And you just go in. So I would just be clicking like a stock like this that would have popped up. Oh, I already did that one. I'm just looking. Here's another one that popped up, that would have popped up on my scanner. And this is a stock that I might have been a little more. These are the ones that I'm more comfortable if I'm going to buy because it's riding the 9 EMA. It's nice and simple, And this thing kind of just consolidated and rid up, and it kind of ripped all day. And it stood along the 9 EMA. These are the safest ones because they're like slow and easy, and they're right along the moving average. Nothing crazy. You think this thing just gapped up all day. It just gapped up and held the ties all day. And here's another one. Look at this stock. These are the stocks I love to short. When they like rip up like this thing opened at, when the market opened, it was at 12.55. It hit 13.20, and then it just kind of consolidated and came down. So if I'm looking at this at the market open, as soon as it's gapping up and I see it's away from the 9 EMA, I'm just, like again, I'm putting that trend line to get a sense of what the stock is going to do and see if it's going to break the trend. And right here, once I saw it break the trend and I'm seeing it, I'm seeing it go here, and then it kind of starts giving it back, I might, short it if I can. If I can find shares, I would short. And, you can make a little money shorting. And there has to be value. And of course, I'm looking at the MACD lines. I'm not talking about these. I'm sorry, guys. I didn't even mention these. This is a very bullish sign. So when you see the candles separate like this, where the green is over the red like this, it's a very bullish sign. You can expect the stock to gap up. And you see that squeeze when it's light blue like this, that means you're going to see a pop. But when you see the RSI red like that, that means it's overbought. Overbought, and it's going to pull back at some point. And once you see the curl start, that, and you see this, that's a very bearish sign. So you can short into this. It's no guarantees that it's going to work, but this is how, and you see the stock actually wound up ripping up, So, you just got to be very careful. But, you could, if you watch this and, you could have made, a nice little profit here. If you'd have got in somewhere here, you could have made like 20 cents on the short. And then went long on it. But now the other play that I look for, and I have this gap scan, 2 candle gap scan, is dip buys, meaning this is specifically focusing on. So when I look at the nightly scan, the dip buy scan, I'm sorry, guys. When I look at the nightly scan, the big percentage movers, and I'm looking at the gap, two candle gap scan, I'm focusing on the strength meter where it's green. All right, I want to see stocks that are moving up. All right, so I'm clicking on this and I'm focusing on things that are green, not red, just green. I don't care about red and I don't care about sideways action. With the dip buy scan at the market open, I'm looking at the totally opposite thing. What I'm looking for are stocks that are red, and these don't have any right now because the market like this stock like this red. And what I'm looking for is a stock like this that at the market open is collapsing and selling off. You could do one or two things. You can short on the way down if you can find the shares, um, or what I like to do is I like to watch it as it collapses and finds its support level. So what I mean is you watch it as it sells off, and then you look to see where that bounce is. So in that bounce right here, you see how it went from 45, 48 once it found its support level. And let me zoom in here. So once it finds its support level, you put a little trend line here so you know this is support, and you want to make sure it doesn't go below this, and you buy stocks that find their support, the dip buy. That's what's called a dip buy or gap fill, where when a stock sells off immediately, really quickly, at a lot, a big percentage, you usually get like an opportunity to buy the dip. So it'll find support eventually somewhere. You gotta be careful, watch it. And if you notice here, the MACD curls, and you notice there was an opportunity. So I mean, obviously this is a super expensive stock, but you can apply this to stocks that are a dollar, they $2, $5. They all sort of do the same thing, where it sells off, it finds its support, and then you can buy the dip. There's a lot of traders that do this because they find this a lot safer. Because what you do is once you find your support, you just put that. And I got a trigger here where I have my buy with my stop, where if I you see how I would have if I would have bought this at 45.59, I have it already set that if it dips below 10 cents below that price, it automatically sells my shares. So I'm not holding and hoping if it goes against me. And that's what a lot of traders do. That's what my dip buy scan is. It's exactly for that. At the open, while I'm looking at these, if I don't see anything, sometimes I'm looking at the dips and I'm just clicking and I'm looking to see at the market open that to watch. Look, this is an example of another stock that doesn't have a lot of shares, but I just want to show you how it happens where the market opens and the stock sells off, and you see how it's selling off, and then at some point you have to be patient. Like this didn't find its support at till 10:20, but if you're patient enough and you watch the stock to see where it finds its support, you can buy the dip, and you see it goes from 22.85 all the way up to 23 23.19, and then it kind of gave back some of that stuff. But this is not a good example, but that's what a lot of these stocks do. They will look for a couple others just so you can see how. Let me go put the volume really high. That's weird. Let's do this. Let's look at CA. Here's another example. Oh yeah, this is the one I showed you guys earlier. Let's do CMC. Let's see. Nope. I'm gonna see if I find a couple of other stocks. Here's another one. COG. Look what happens, right? It would have popped up on my scanner because that's the criteria. I have like two consecutive red candles, and I would have watched it and I said, whatever. But I would have been watching this, and then it kind of gaps up, and then it kind of washes out and sells off, and you see it bounces off, but it sells off and sells off and sells off. But then look, it finds its first support here at 23.93, and then it goes all the way up to like 24.4, and then it kind of sells off, it sells off, it sells off, and then it finds its support at 23.83. But look what happens when it completely sells off, and that's why sometimes these fake dip buys, you gotta be careful, because sometimes you get stopped out because they still have more to give, and you're not sure. But look what happens once it found its support at 11.14, because it sold off so much. You see, look, and it starts, and then it kind of ripped all the way back up to about 2024. So sometimes you watch the dips, but really what I focus on, and I'm trying to find a stock to really show you, are the ones that, and we didn't have too many, unfortunately, that just kind of like they have like just a lot. They have like 9 or 10, 11 consecutive red candles, and then they just bounce. But this thing had a nice dip too. It hit a low of 1990, and then it went all the way up to 2050. It slowly gave away its gains, but this wasn't a very liquid stock. But if you notice, the market opened, and it would have appeared, this would have popped up on my scanner here, it would have popped up on my scanner again here. And and I might have seen it, and I'm looking for I'm looking at the strength meter, and I'm looking for the reds, anything that's red. I don't care about anything that's green. At the open, then maybe at like 10, 20, 10, 10, 15, 10, 20, maybe I start caring about this because maybe it found its support and now it's bouncing back up like this. So this is a stock that, it took a while, but by about 10, 13, it found its support level, and then look, it went from 1090 all the way to 2055, 2054. It had a nice gap, and it actually wound up that whole day. It actually continued to bounce. It went all the way up to 2165. So those are the three things I look for. So I look at my watch list primarily, and I focus on the stock. So for example, Monday, my number one stock that I'm gonna watch is NAK. I'm gonna be looking to short this Monday because this is a stock. If you look at the 5-day chart, this is a stock that generally trades in that $2, $2.90, $2.80 range, right? Usually and it's up at 341. So it might give back some of those gains. And if you look at the 1-year chart, just to see, this is a stock that, all right, it's about to hit its yearly high. So more than likely, it's going to give back some of those gains Monday. So it's a liquid stock. It's sold 12 million shares. So I would be looking to see it had 3 green days where it went from 252 to 345, and then look what happened when it is high. The next day, this thing went from 345. It opened at 317, and it closed at it hit a low of 275, and then it closed at 311. So that's my expectation is that this thing maybe rips a little at the open, attempts to get close to 345, and then sells off. So that's what I do, guys. I utilize these scans to try to find my plays. I'm looking at the 1-minute chart. I'm looking at the 5-minute chart. All right. Let me remove all these just to show you how. And again, just to remind you guys. Let's clear, remove all drawings. So what I'm doing is, if I'm watching a stock again, and I'm not sure where to go, and if I see the stock kind of starting to consolidate, it's starting to have a run, like this is too choppy, but let's assume I'm watching this, and now here I'm comfortable because I see it running the 9 EMA, and it's just running this nice trend, right? If I catch it, initially quickly, I'm putting a trend line there, and I'm comfortable with this because it's riding along the 9 EMA, and if I'm not sure where to trade it, this is the 5-minute chart. If I'm looking at it, if I want a clean entry, I'm looking to see if it breaks above. Like, let's say if I'm watching this and this is the candle, I'm catching it. I'm not sure what to do. Once I see it, you see how it pulled up, and this is like a bull flag forming. What I would do is once it breaks above it, this is my entry, 311, and my exit is probably the low of the previous candle, which is 307, and that would be my exit. But I would watch it. This would be my entry. So if I was watching this and I'm looking at the 5, let's say I'm not comfortable with the 1, I'm looking at the 5-minute. Once it breaks above this 310 price, I'm in. And had I got in, let's say at 310, I could have rolled this up all the way to about what was the high? 317. 7 cents, not much, and then it kind of consolidated and gave back some of those gains. But then look, it started to trend again, and it just continued to rip all day. But that's kind of a way a lot of people buy and enter stocks, and you usually want to focus on the first hour because the first hour is the most volatile of the day. Okay, so like an INFI, if you're watching this and you're not sure, it's like you see it gap up and you see it pull back. This is the higher day. This is the lower day. If it breaks above it, that's your entry. And if you're watching it on the 5-minute, you're looking and you kind of get a sense, and you see it gap up, you're not sure what to do. Say, hey, if this breaks above this candle on the 5-minute chart, so this is at this point it's around 935. You see it break above. Here I see it sideways. I'm still not in. I'm still not comfortable. If you're looking at the 5-minute, but once it broke this, I'm in. And here you could have got executed at 1160 and rolled this up to about, what was the high? 1220. And then kind of sold here. You see the pullback. All right. So and you see on the 1 minute chart, you see it's all riding the 9 EMA nice and clean. So it's just what you're more comfortable trading. Some people, when a stock is super volatile, they tend to use the 1 minute. When a stock is not as volatile like what this was, it's cleaner. It's a cleaner entry, and the people use the 5 minute. They just look at the 5 minute candle to break a new high over the previous candle, and that's their entry. You know, and with day trading, you're looking to make quick profits. I mean, you would love to hold and make $1, $2, $3 on a trade, but you're making 10 cents, 20 cents, 30 cents. I mean, that's 10% or more on your money. That's great. And if you got depending on the price, if you're sized in 5,000 shares, 10,000 shares, if you got a 10,000 share position, 10 cents is $1,000. So it's really depends on how much size you have in a stock. All right, so that's basically what I do. When I'm in and I'm watching a stock. Like, this is a stock that was super volatile. You know, I'm looking at this. This is a stock that ripped. I would be looking at this and I would probably be a little uncomfortable. But had I watched this, let's say I caught this at 9:30, and I'm watching this. This is you know, excuse me. Let's go back here. All right, now this makes more sense. So, I would probably be looking at the 5 minute and the 1 minute, like I usually do, and I see this gapping at 9:30, and this happened in the first 5 minutes, and then 9:36, and then 9:37, it kind of gapped up. What I would have done is, if I'm not sure, if it's just ripping, because you see it goes from 4 to like 6, you're not sure what to do because it's moving so fast. Use the 5 minute. You say, hey, you know what? If it breaks above this, I'm in. But if you see it, if you get in here, above that 5 minute candle at 6:45, and you're watching it go, in the next 5 minutes, this thing went all the way to 8:37. I don't even know if I'm holding, you know, that long, because on the 1 minute you're watching this and you see it go up, and you see it forming the bull flag, and it's above. Actually, it's above the 9 EMA, but it's riding VWAP, and which is a good sign. But I would be scared that it's gonna reverse on me. So I probably take like 50 cents and then I'm out. And then look what happened. It kind of consolidated and then it gave back. It went from $8 to $7, and this is where if you see a stock moving up like this and moving trending sideways, what I do is I right away, let me just remove my drawings just so you can see. Remove all drawings, yes. What I'm doing is, if I'm watching this, I'm putting a trend line here, and then I'm watching it go up, and if I see it break this way, guess what? I'm saying, what's resistance? All right, that's resistance. So I'm just drawing a line this way, to get a sense of where it's going, and I'm drawing. Okay, what's support? Ah, crap. So here's resistance, and then here's support, and then I'm just like, I'm just running to get a sense. All right, here's the channel that it's running in, and you kind of get a sense. All right, this is support, this is resistance, and you kind of want to see it. Is it going to break above that channel? Is it going to break below that channel? Once you see it break below that channel, you're out, or you're shorting it if you haven't made a trade, And then here, look what happens. It kind of hit bottoms here, and then it finds its new support here. So you know what I would have done if I'm watching this? And I didn't trade this at all. I would just put a little line right through it, and then see, all right, where's it? Here's the high. I would have, kind of put a trend line here just to kind of get a sense, and just watching it, see if you trade the channel, and you see, look, it goes through the channel, and then boom, it breaks below it, and that's another opportunity to short. This was extremely volatile, this stock. This is a stock that is, it's, let me see, do I have shares here? I don't have shares. Let me look at a KBSF. Is if we look, it's a low float stock. Those are the stocks you gotta be careful of because they move really fast. So it's a low float stock. And actually, you can put shares in your criteria. If you put shares is the equivalent to how many available shares the stock it has to trade. Yeah, it's actually right here. I'm so stupid. Yeah, I had it right here. 1.7 million shares. So these are low flow. It's super volatile. The prices move real fast, and sometimes it's scary. Like sometimes I stay away from them because they just move too much. But if once it found its new support level here, I just put another two trend lines in. It's watching it form this channel, see if it's gonna break above it or break below it. And you see, look, it broke below it, and then it went from eight. What it did, it hit a high of 8.11, and then it came all the way down to $6. So if you had shares to short, you could have tried to get in short, and I would have watched it form here, and then look, I would have put another trend line here. And that's kind of how you follow the stock. And that's only if you're gonna be paying attention to a stock all day. But that's sort of how you get a sense of the direction of where the stock is going. All right. So, that's sort of what I do at the open. I just look. I have a stock in mind on my watch list that I want to initially look at to see what's going to happen with that stock. And as a short seller, it's a lot simpler to focus on a stock on your watch list because you're looking for a stock that's overextended. For example, like a stock like this, KBSF, where this is a dog shit company. You look at the 5-day chart. This stock was 18 cents 5 days ago, and it's at $11. What do you think is gonna happen? It's gonna give back all its gains. So this is a stock that I'm gonna be looking if I can find shares to short, which more likely I probably won't be able to. But if I can, I'm gonna short it. If I can find it, I'm gonna short it. Otherwise, I'm gonna look for another stock on my watch list, like an NAK, and look to short this. And that's what I focus on. I look for stocks that are overextended, looking to give back some of their gains. All right, that's what I primarily focus on. And everybody has their own way of trading. But that's what I like. That's what I'm realizing that is really the way to go. To me, it's the safer bet, and there's a lot more money short selling. All the retail traders that do really, really well in the market are short sellers, and it's for a reason because you're looking at small cap companies. These companies are shitty companies. They're gonna, they don't hold their gains. The only two stocks that since I've been trading over the last year that I've seen go from, like $2, $3, $4 up to like, a substantial amount are Ren. Ren is a stock that, when I first started making my trades, this is one of the stock I traded. This was $2.25 back in February last year. It's $48 Now, had I known that back then, yeah, I would have put all my money into this and I'd be worth, a couple of million right now. But, who the hell knows that stock's gonna do that? I had no idea that this stock was gonna do that. So, this is what, and the only other stock that comes to mind running with no chill is Cara. There's another stock that, it's like $4, and now it's at $17. It's ridiculous, But this is a stock that had 2 red days. This is a stock that I shorted the other day. I made a killing shorting it. And I told everyone when I made the video that this was going to give back 18. It had 2 red days. I expect this to probably give back some more. I would be looking maybe to short this again. It has more to give. Look at the 20 EMAs at 14.21. The 50-day moving average at 11.48. The 200-day moving average at 7.66. I would expect this to give back a lot of its gains, but we'll see what happens. It just completely sold off. So that's sort of what I do. That's sort of my strategy, guys. My advice is to watch all the videos. Watch those. Tim Sykes gets a lot of shit. Yeah, he doesn't teach you anything about indicators and all those things, which I think is bullshit. He uses some. I don't believe any of that bullshit he's saying, but he teaches you about patterns, about dip buys, about support resistance, and I learned a lot. That's where I initially learned this stuff from. Watch Cameron Foos. He's primarily a short seller now. He looks for stocks and he shorts into whole numbers, that are overextended, and he shorts them back down. I mean, to me, it's the winning strategy. Tim Grattani, Cameron Ross, I think from Warrior Trading gives you the best bang for your buck from free videos. He's the most transparent, and he's to me the best teacher of all of them. And what he does, that's his strategy. He looks at the 1 and 5 minute chart, and if he was watching this, he would say, hey, I'm gonna trade when I see a stock break the previous high. So like if he was watching this was the high of day, he might get in here. But what he would say is, if this candle, the next candle to break into a new 5 minute high, he would trade. That's what he does. He looks for the 5 minute candle that is above the previous 5 minute candle, and he just that's his entry. That's kind of what he does. And that's kind of where I got this from. So I watch all these guys. I'm always trying to learn. So I hope this makes sense. Just to give you a sense. Watch my other videos. The other videos show you how I build out my criteria for all my scans. All right. If you have any questions, hit me up on the Facebook or on the Twitter, and I'll show you whatever I know. All right. Thanks, guys.